So this is the part 2 on accounting for merchandise entities. So in the last episode, we have compared the accounting for service entities versus the merchandising entities. We started with comparing their statement of financial performance or income statement. Well, here they are. Next is, I have told you that the accounting for merchandise entities is a little bit different because these entities have the following activities. So number 1 is that there is accounting for sale of goods, which we have already finished discussing in the previous episode. We have number 2, which is the accounting for purchase transactions. This will be the topic for this video. And we have the number 3, which is the inventory count, which will be explained and expounded on the next episodes. So before we start, please see the previous episode and the link is on the description below. With that, let's start. Let's start with the accounting for purchases. But before we do, let me tell you that the flow of the discussion in this video is very similar with the previous video, except that here you are already going to assume the shoes of being a buyer or customer instead of being a seller, which is the assumption in the previous video. Now, let's account for purchases. So we have an example right here whereby you are ABC and you purchase goods of 150,000 on account. The entry is simply debit purchases, credit accounts payable if the purchase is made on account. However, if you purchase by directly paying cash, then you will have to credit cash instead of credit accounts payable. But then again, you need to ask, when are you going to debit purchases? Of course, the answer is when the ownership of the goods are transferred to you as the buyer already. And when is that again? Let's check the rules of transfer of ownership. Number 1, if it's already in your property, then it's already yours. Except that if you are only the consignee, because if you are, then you are just the custodian for those inventories. The only transaction that you can account as the consignee will be the commission that you're going to receive if the consigned goods are sold. Number 2 is just a reminder that if the goods are still on the property of the seller or supplier, then you can't debit purchases yet. And number 3, if it is goods in transit from the supplier, then you should check the shipping terms, because if it is FOB shipping point, then you can already consider it as your purchases because it's already yours. But if it is FOB destination, then you can't record purchases yet since the goods are still the seller's. Now let's apply if you did understand the rules on the transfer of ownership. So here's the illustrative problem. So you can pause the video first so you can read the problem thoroughly, and assuming that you have already read it, let's try to analyze the problem. So ABC has an adjusted purchases of 120,000. Now this has a chance of being changed because of these 3 purchases. Aside from this, it is stated that the goods from the supplier are usually delivered in 3 days. So now let's check this number 1. So on 12/31/20x1, goods worth 10,000 were shipped by the seller. So it means it's still in transit on 12/31/20x1 because again, it takes 3 days for it to arrive, meaning it will be received by the ABC on 20x2 already. Next, invoice from the seller was received in advance by ABC on 12/30/20x1, which if interpreted will mean that this purchase was already recorded in here, the 120,000. However, the term is FOB destination, meaning it is still not yours in 20x1 because it is still in transit and the shipping terms is FOB destination. So what do? We need to deduct that 10,000 from here. In number 2, the goods already arrived in 20x1, right? Because the goods were shipped by the suppliers on 12/20/20x1, meaning it already arrived before the end of 20x1. Which means that the shipping term, whatever it is, became useless because again, it's not in transit already. Aside from that, we can already conclude that these goods should be considered as purchases in 20x1. But in here, it was expressed that the goods were only recorded in 20x2, which meant that it was not included in the 120,000 here. So we need to add it here. Now let's go to number 3. And in number 3, as you can see, the goods are shipped only on 12/29/20x1, which means that the goods are still in transit on 12/31/20x1 or the year end. But since it is under FOB shipping point, then these are already valid purchases of ABC in 20x1. The question, however, is this 17,500 included already on the 120,000? And the answer is no, it is not yet, because we are going to assume that the invoice from the supplier is also in transit together with the goods. So we are to assume that ABC has not yet recorded the purchase. So what we need to do is to include that in the 120,000, because again, these goods are again valid purchases of 20x1 already. So if we're going to account for these adjustments, the correct amount of purchases is 142,500. So that's it. After the purchases, let's account for purchase returns and allowances as well as the purchase discounts. But before that, let's put the income statement for merchandise entities right here. Now, let's have the purchase returns. Usually, you return goods to suppliers if they are damaged or it has some defects, or the agreed specifications like the brand or the color or the quality that has been agreed upon by you and the seller were not followed. So we have our example right here in which we are ABC and we return goods to the supplier because of defects. The goods cost 40,000. The entry is simply debit accounts payable to reflect the decrease of your payable, and credit purchase returns and allowances only if you did not pay yet for the items. But if you have already paid for the items, instead of debiting the accounts payable, you debit cash for the refund. Now, let's talk about purchase discounts. Again, there are two types of discounts. We have number 1, the trade discount, which are given to buyers to encourage them to buy more. Now, if you are the buyer, you will not have any journal entry for the trade discounts you enjoy, because again, the amount that you have recorded as purchases based on the sales invoice from the supplier is already net of trade discounts. The second type of discount that you may enjoy as a buyer is called the cash discount. Here, you will be given this type of discount if you pay within the discount period. So we have an example right here, which is you have been given by your suppliers credit terms of 3, 10, and 30 for your goods bought on account worth 100,000. What does this mean again? It means when you pay within 10 days, you are gonna get 3% discount. Now, let's go to the entries. On the date of the purchase, your entry will be debit purchases and credit accounts payable 100,000. It is simple, right? But on the date of payment within the discount period, you are to debit accounts payable of 100,000, but you are only going to credit cash of 97,000, which is already net of 3,000 discount. So what is the balancing figure? The balancing figure is credited to the contra purchases account known as purchase discounts. So that's it. But before we move forward, let's have an illustrative problem featuring these two types of discounts. So we have here on 3/1/20x1, you were given trade discounts of 5 and 7%, and the credit terms extended is 3, 10, and 30 for goods you purchased on account worth 100,000. So this is similar to the problem in the last episode. However, in here, you are the buyer. So what should be the entries if you paid on 3/5/20x1, or in simple terms, within the discount period? Of course, on the date of the purchase, you should debit purchases, then credit accounts payable, worth 100,000. But you need to multiply it with 0.95 first. And after you get the answer, it should be multiplied again with 0.97 or 97% in order to deduct the trade discounts of this 5% and 7%. and it will equal to 88,350. On the date of payment within the discount period, you need to debit the accounts payable of full 88,350, but you only credit cash of 85,699.5 because of the purchase discount of 2650.5. The 2650.5 is the 3% of 88,350. But if you paid in 315.20x1 or beyond the discount period, your set of entries are as follows, which are very similar to this except that the cash that you are to pay will be the full 88,350 and not the 85,699.5 because there will be no purchase discount. So that's it. However, we are not yet finished. What you've seen here are the set of entries under gross method of accounting for purchases. We have an alternative method which is what we call the net method. And you are going to use this if you are sure that your company will pay within the cash discount period usually. Especially if, for example, the goods that you purchase are high value items or in large number of quantities. Why? Because logically, high amounts of purchases would mean high cash discounts also, and it would be impractical to not take those discounts. So what will be the entries if we use net method and you paid within the discount period? Answer: debit purchases, credit accounts payable but with the amount 85,699.50, which is already net of trade discounts and also net of the 3% cash discount. And upon payment, the entry is simply debit accounts payable of 85,699.5 and credit cash 85,699.5. But what if you paid beyond the discount period? If you paid beyond the discount period, at the date of purchase, the entry is still debit purchases 85,699.5 and credit accounts payable 85,699.5. But at the date of payment, you are to debit the accounts payable of 85,699.5, but you are to credit cash of full 88,350 as payment because you paid beyond the discount period. The problem is the entry is not balanced, right? So actually guys, there is another debit called the purchase discounts lost, which is different from the account purchase discounts. As you can see, it has a debit balance as opposed to the purchase discounts which has a credit balance. Another is that remember always that the purchase discounts as well as the purchase returns and allowances are deducted from the gross purchases in order to get the net purchases. The purchase discount lost is not part of the net purchases but is actually part of the operating expenses of the merchandise entities. So that's it. The next is all about the freight in. So we are now on the freight in. So what will be the entry? You already know that it depends on the shipping terms and the freight terms, right? The shipping terms answers the question who is responsible for the freight. If FOB destination, of course, the ones responsible for the freight is the seller. And the ones responsible, if ever the terms is FOB shipping point, is the buyer. The freight terms, on the other hand, actually gives you an idea as to who actually paid for the freight. If freight prepaid, then that means the seller paid for the freight. But if freight collect, then you as the buyer is assumed to have paid for it. Now, let's apply this to our example. So we have here 3,000 was paid for the transportation of goods from the suppliers. The entry is again dependent on these four possible combinations. So we have here the number 1, which is FOB destination, freight prepaid. Meaning, the seller is responsible for the freight, and freight prepaid means the seller actually paid for the freight also. So as a buyer, you will have no entry under this combination. In the second combination, the seller is responsible but you are the ones who actually paid for the freight. So your entry will be debit accounts payable 3,000 and then credit cash 3,000. The third combination is actually the opposite of this B, wherein you are the ones responsible but the seller assumed your responsibility. So of course, your entry will become debit freight in 3,000 and then credit accounts payable 3,000. And in the last combination, you are the ones responsible but you actually paid also for the freight. So your entry here will be freight in 3,000 and then credit cash 3,000. So that's it. However, before we end, I would like you to remember that freight in is actually added to the gross purchases in order to get the net purchases. So the treatment for freight in is very different from freight out, because freight out, if you can remember, is an account under operating expenses. So that's it for this video. Thank you for watching and see you on the next one.